Hello, and thank you for joining me. We're going to talk today about some new tax laws and the Tax Cuts and Jobs Act that was passed a year ago. But I want you to be aware that there's a tremendous amount of interpretations being provided to us by the Internal Revenue Service. Also, we've just received some new information for 2019 as far as rates and some other calculations are concerned, so we're going to try and keep them very current. My name is Bart Basie. I'm a CPA attorney, got a hold of a doctorate in economics. With that and $3.70, you can get yourself a cup of coffee. I'm glad you're with me. It's going to be an interesting program because we're going to cover a lot of the new tax laws and how they affect you in 2019. I want you to be aware that these courses and this program I'm doing is being conducted for my tax courses online, and I hope I will be of some help to you in this program. Thank you very much for joining me. With that, let's go ahead and get started. I want to go over some rates with you first. You're going to notice on slide number 2, we've got some old rates. I just wanted to show you some comparison as what's happening. I'm going to go over individuals, married couples filing joint returns, singles, and so forth, and head of household. But you look at slide 2, you're going to notice, gee, this is what it used to be. You know, $9,325 had a 10% tax rate on it. What's happening now in 2019? Well, if you look at at slide number 3, these are the brand new rates. They've just been released for 2019. Not 2018 now, we're talking 2019, and you're going to notice it's now jumped up to $9,700 before you hit the 10% level. The interesting thing, and just skipping through some of these to give you an idea, I know you should have these rates obviously close by you when you're doing taxes and when you're doing some estimates for your clients. But take a look at the very last one on the bottom left-hand column there on slide number 3. You're going to see that it used to be years ago $500,000. It's being indexed every year. Now you got to be careful because a lot of people think the index is CPI, Consumer Price Index. And I'm sorry, it's now changed. It's now called chained CPI, and that's lower than the actual CPI address. It's, for example, like Social Security. In 2019, Social Security payments went up about 2.7%, where while inflation went up 3.1%, because inflation was based upon Consumer Price Index, they're now using what is called chained CPI. So the people collecting Social Security get a raise in 2019 of 2.7%, not the full 3.1. So if you look at this bottom line on slide number 3, you're going to notice it's gone up from $500,000 in 2017 to 2018 to 2019. It's now $510,300 before you get into the 37% tax bracket. The brackets have not changed. This is important for you to note. Whether you're talking about individuals or married couples or head of household or whatever the case, or married people filing singly, the percentages, the rates, and you'll notice we've still got 7 categories of rates. The percentages haven't changed. But what Congress decided a few years ago is that they would index the actual dollar amounts as to when you get to each range. So the dollar amounts have now been changed so that you don't get to the 37% until you get $510,000. They got to be careful because besides these rates, we've also got Medicare rate, the 3.9%, 9/10% extra that's added, and those are added after you get $200,000 of taxable income.